Exchange motives, conversion. This is a huge one for the next forever, because ultimately baby boomers are looking at options for how they can take some of their properties and convert them into something other than being a landlord and making cash flow, right? They've done things well and they've done well with rentals, but they don't necessarily need the income or the appreciation from that asset anymore. In fact, what's more important to them might be something to do with time, family, friends, hobbies. So with that in mind, in 2008, the IRS created the revenue procedure 2008-16. Now, in this, they essentially provided the blueprint for how you can qualify your second home into a 1031 exchange candidate, or more importantly, how you can convert your rental into a second home tax deferred. So, primary requirements per the IRS: own the asset for at least 2 years prior to an exchange, right? So you have to own the property, whether it's your rental or your second home, and have had it for at least 2 years. Rented for at least 14 days at fair market value. So in this example, if it's a second home, you decide, okay, we're going to rent this property out for 14 days out of the year. Maybe it happens to be a family member or friend at fair market for 2 years. And then we're going to 1031 into an actual bona fide investment property. Or we're going to take our rental property, right, and we're going to convert it into our second home. So this works both ways. But naturally, the one that's most valued for a lot of people in today's market is taking the rental property and converting it into a second home or their forever home. So the last thing is making sure that the property was not used for personal purposes for more than 14 days or 10% of the rental period, right? So it's very generous as far as what you can do to qualify your property into a forever home or to get your second home into production for rental. In this case study, fresh dirt to Fallbrook. So in this case, Guy and Amy held 3 parcels of dirt here in Erie, Colorado, and some expensive dirt, might I say, as they sold the 3 parcels for $1.37 million. At that point in life, their situation was that the land was not something they were going to develop anymore, right? And their son was here in San Diego and had their first grandkid. So naturally, as I talk about the season of investing in life, their motivations changed, right? And so they're able to take the parcels of land they held in Erie, Colorado, sell those, and reinvest into a detached property here in Fallbrook. Now, coincidentally, we're just upon almost 2 years since they've done that. So they'll actually be enjoying the property this holiday season while visiting their son and grandson, rather than going out and maybe mowing some lawn there in the middle of County Road in Erie, Colorado. So just a phenomenal opportunity for people to take assets that are not necessarily funding what their lifestyle is today or funding what they want, and converting that into an asset that really provides them what's important to them, which again, family, friends, hobbies, time, simplicity, right? They're not dealing with 3 tax bills every year. They're not dealing with maintaining the land. They're not dealing with paying money out of pocket for taxes. They're just enjoying a second home here in Fallbrook and spending time with family. So for this example, just think about, what do you currently own that may no longer be serving you today, or maybe that isn't really a motivation of you anymore as far as owning rental property. So a lot of opportunity in this space, and be sure to think about, well, if I did want to own a second home, where would that be and why? What would that look like, right? The opportunity is yours if you choose to take it.